This roadshow is brought to you by ResearchBytes.com.
Hi, good afternoon, good evening, everyone. And thank you for being here for our Q2 earnings. May I take this opportunity to wish everyone from TCS a very happy Dussehra on this occasion. And as usual, to start things off, I'd like to request our CEO, Chandra, to give you an overview of the quarter.
Good afternoon, all of you. Nice to meet all of you. We have had an unusual quarter, as I said in my press statement. A rather very subdued growth on the revenue line and an exceptional margin performance both at the operating and the net income line. I'll give a little bit of color in terms of what is behind the numbers, both on the revenue line and on the margin line from an operational performance point of view. From the revenue line, I think there are basically 3 or 4 key messages that I would like to give. We had said that the BFSI sector is going to be soft, and it is proving to be soft. We confirmed during the quarter, and that has pretty much played out as we expected, and it has delivered a growth of 1.2% on a sequential basis. We had a negative surprise in India, where we got a delay of some orders and the execution of those orders to the extent of 180 crores. And that got delayed from Q2 to Q3, so that is not lost, that will come later on, but obviously that didn't contribute to this quarter's revenue. Then we have had a much more softness in retail discretionary spending in multiple places. That has resulted in a degrowth in retail. But apart from that, all the other verticals have delivered a very strong growth, whether it is life sciences, whether it is manufacturing, whether it is telecom, whether it is utilities, energy. Those verticals have done well. From a geography perspective, we have had a good growth in key markets. Europe topped the list with about 3.7% growth. Asia Pacific about 3.5% growth. US is about 1.4% growth. And UK is about flat. And it's all constant currency terms. And India is a decline of almost 8%. Overall, if you look at the margin performance has been pretty strong, and it's not only an improvement at the operating margin level, it's a pretty strong improvement at the gross margin level of 80 bips, and at the operating margin level it's an improvement of more than 90 bips, 95 bips, delivering 26% margin at the company level, which is very, very good in this quarter considering the number of headwinds that we had to face, and the growth itself was very muted. The deal wins has been pretty strong. We got 9 deal wins during the quarter, 6 of them from North America, 1 from Europe, and 2 from Asia Pacific. In terms of verticals, BFSI and retail have contributed 2 each, and 1 each in a number of other verticals across the board. So the deal wins is strong, and we don't have anything unusual to talk about. Then in terms of employee addition, it's pretty strong quarter. 9,940 people added to end the quarter at 371,000 and odd people. Attrition, again, is one of the best quarters, Our 12-month attrition is at 11.9% for the IT sector, which is IT segment, which is very, very strong. Overall, that's the commentary that I would like to give, the reasons behind the numbers, but happy to take questions. Thank you.
Thank you, Chandra. First up, we have Reema from CNBC.
Good evening, gentlemen. Pleasure to be here. First, if you could tell us, we could calculate that the miss on your revenues in account of India would have been closer to $30 million at 180 crore. If you could tell us what, the negative surprise which came in on account of retail, as well as BFSI, we just want to assess where the miss is coming, if you could help us with some numbers. And what are the headwinds that you'd like to articulate for the coming quarters? Because, India, as you said, will, bounce back.
See, India is about 180 crores, and that should show up in the next quarter. Retail, it's more a ramp up in the discretionary space. One thing I can confirm to you is that it's pretty broad-based, and we have reviewed each one of those engagements. None of them are cancellations. All of them will happen, but I can't tell you that they will happen in Q3. They can happen in Q3, but retail sector in general is pretty tight in Q3 because it's a festive season. Their focus in operational delivery. So I won't count on all of those things showing up in Q3, but some of them will, and some of them will spill over to the subsequent quarter. That's where it is. And otherwise, there is nothing specific to point out.
No other headwinds for the future
Nothing,
quarter?
nothing to point out.
Okay. Q3 and Q4, will it be weaker than the usual seasonality? And Rajesh, if you could come in, will you maintain your margin guidance band of 26 to 28% for the full year?
See, on the Q3 to Q4, see, the macro is what it is. So I have to put all this caution. Macro is what it is because the US elections are not over, and if any surprises comes, I will indicate. But otherwise, I'm tempted to say that Q3 and Q4 this year will be better than the usual years. How much better, I can't say.
Okay. Any Brexit-related impact, whether it's in terms of a deal cancellation or a delay in decision-making that you would like to highlight? And Rajesh, back to the margins question.
See, margin question, the answer is our intent is to stay within the band. We said that last quarter, very clearly we said at 25.1, I don't think that anyone expected us to deliver on margins, but we knew. And I want to particularly highlight that the operation improvement has come even at the gross margin. So it is not some cutting costs somewhere, okay? So I think it's a very structural improvement, which is what we always look at. So our intent on the margins is 26 to 28. And our intent is to stay within that band. Second, on your question on Brexit, with all the numbers, I think one will be tempted to connect everything to BFSI and Brexit, but I will have to say there is no impact that I can connect to this, except the BFSI slowdown. The BFSI slowdown, it is a 1.2%. You can see the company growth rate at 1%. BFSI is not really bad. You can take that call. But generally, I believe that the BFSI constant currency growth will be 4% plus in a Q2 for TCS.
Would it be 4%?
We have always, we will be in that range. We have done 4, we've done 5, we've done 6, and this. But the drop in the revenue growth is due to these factors. India is a real surprise, and retail is multiple places. But I think both of those will come back, but not necessarily in one quarter.
You know, in August, you had indicated the BFSI weakness in North America. You also add BFSI in UK, And secondly, if you could just come in on digital at 16.1% of your overall growth, of your overall revenues, it would mark a quarter-on-quarter growth of what, 1.5%, and that's significantly slower than the growth rates that we've seen for your digital vertical in the past. So if you'd like to
So
comment
there
on
are
that.
two answers, two questions you asked me. The BFSI softness is in North America and in the global banks. That's what I told you. It's in the North America. UK BFSI has done very well. I don't want to give you the number, then you will get shocked. It's very, very good at this point. And continental Europe also has done very well in BFSI. In terms of the UK softness, it is predominantly in retail. Okay, and retail has been broad-based. Even in North America, there has been softness for us, but retail is what is affected that growth in UK. Then in terms of your next digital, I think, see, you have to look at it in the context of a slow quarter. The quarter itself is 1% growth, and the softness is in discretionary spending. But even in that quarter, on a year-on-year basis, it's a 25% growth, digital. So I think digital is on track. The number of engagements we are winning is excellent. If you see the press release, we have given you a sample of the kind of engagements that we are winning, the kind of investments we are making. So digital is pretty much on track. We are going very strong. The number of people who have completed the digital learning platform is more than 180,000 associates. We're winning engagements in blockchain. We are winning engagements in supply chain. In OmniStock is a new product that we have launched. We are seeing a lot of traction in cloud. We are setting up some of the largest real-time analytics solutions on very large clouds in banking, in retail, across sectors. Some of the public cloud migrations that we are undertaking in manufacturing are really top-of-the-line engagements. And our own platforms like TAP, Ignio, Advanced Drug Discovery platform in life sciences, all of them are getting traction. So they are pretty much on track. So nothing, no unhappiness on digital.
Ashwin, ET now.
Good evening, gentlemen. Chandra, if I could start off with you and coax you to perhaps stick your neck out and tell us whether the degrowth in the BFSI vertical, is it temporary, is it just a blip on the radar, or can we expect this pressure to continue for the next few quarters? Based on the feedback from your clients, where do you stand as of now?
So there is no degrowth in BFSI, first of all.
I mean the pressure. There's a softness
in BFSI. So I mean, I have to be prudent in answering that question, because we'll have to see how the next few months pan out, because it is the election quarter. So we need to watch. But I personally believe that there is no cancellation of engagements. We don't have any headwind in an account or a particular segment of BFSI or a particular market in BFSI. We feel we are pretty robust. We have seen our BFSI growth over the last 5 years. We have studied in multiple dimensions. We continues to gain market share. We continues to win significant amount of digital engagements in BFSI. So I think we are in a very good place, but that is not to say that the softness will not continue.
So would it be safe to assume that the softness will be limited to this quarter? Are you optimistic of that?
No, I can't say that. So we need to watch. But as the softness opens up, then we will continue to post great growth. But we are very strongly positioned. I don't see a specific headwind that I want to point out. But I can't tell you whether it will be Q3, Q4, I can't tell you all that.
You alluded to the US presidential elections, and that's my next question. What kind of risk do you foresee from the outcome of these US presidential elections? I know it's still early days, but do you foresee any negative impact for the outsourcing industry, say if Trump comes to power?
My view is my personal view, and our considerate view within my team is that I don't see a specific negative impact. I feel that the spend on technology is real. Every company is going through a massive digital transformation. They may adjust budgets between 2 quarters here, 2 quarters there. They may reprioritize projects, but the digital transformation is real. Cloud adoption is real. Agile and DevOps is real. machine learning is real. All these things, customers are trying to build real-time enterprise. Customers are trying to build intelligence with their data, and customers are trying to deliver superior experience. In manufacturing companies, IoT plays an important role, cloud plays an important role. In the consumer industry, some other technologies plays an important role. All these things are going to happen, are happening as we speak, but there will be adjustment of budgets, and we have got to always keep in mind the macro. So now UK Prime Minister has come and said that they are going to call it before March, right? So what does it mean? It's very difficult for anyone to comprehend, and it is a fact that pound has significantly gone down. Right. I mean, it's about 81 or something like that today. So these are things in which we cannot predict. So we do have a currency headwind now against the pound. If you see this quarter, the entire 1% loss, either in dollar terms or in rupee terms, the cross currency, is due to British sterling. And these are things in which it will be imprudent for anyone to make a call. So we have got to watch these things, but the fundamentals of the business are very, very strong. Our execution is very strong. Our investments are in the right place, and we just have to make sure that we don't get hurt by the macro.
You spoke about the pound hitting record lows, and that brings me to my question to Rajesh. Rajesh, if you could throw some light on how difficult is it to manage these currency fluctuations?
No, these are very difficult to manage, obviously. So we have a steady hedging policy which takes care of intermediate term or short term volatility. So what you see as an impact on the revenue line and the operating margin line, we manage to recoup some of it in the other income line and up to the net profit. But that's not a solution to the problem. Major currency like this, going through a depreciation over a 6-month period, going from 95, which is where we were in Q1, to now we are looking at about 82. These kind of numbers are not something that a business can directly, so that impact will fall through. Probably it will settle down at some point, and then we'll have to see what kind of adjustments we do. But the short term is managed through an active hedging policy, which takes care of period-to-period volatility.
Thank you.
Priya.
Good evening. I wanted to understand how many quarters of pain can we expect in retail going ahead?
See, I don't think that I don't think there is going to be a continued pain in retail. I believe that these projects are in-flight projects. There are temporary delays in the acceleration. I believe that some of it will happen in this quarter and some of it will fall into Q4, because some customers who are very, very operationally intensive during the holiday season, different types of customers, they may not ramp up as fast as we would like in Q3. So I think I would expect that it will be between Q3 and Q4. The whatever is this 3% drop that I talked about, I mean roughly $25 million, that will come through.
Also on FY18, are you getting any early indications from clients, something that you can share with us?
Too early.
Okay. And on the gross margin improvement front, what's led to that? Is it pricing?
No, I think it's been a pretty flattish. See, on a low volume, on a low revenue growth quarter, there is nothing much to talk about between volume and pricing, and so it's just execution discipline.
Right. Just one last question on Japan and Latin America. How is that picked up? Because I understand last quarter you had mentioned that there was some sort of degrowth in Japan as well.
So both Japan and Latin America, the good news is that they've seen a positive growth, but a small positive growth.
Thanks, Priya. Silky Singh, Z Business.
So my first question is that what kind of cross-currency headwinds did you face in this quarter, in Q2? And do you see the problems going ahead? And second question would be on, you mentioned that there have been delays in the orders, 180 crore something, the figure that you gave. So what are the geographies from where you have faced these delays?
That is straight away India. That 180 crores is India. Let Rajesh answer the cross-currency question.
Cross currency for this quarter is primarily coming from the GBP because we had an average rate of about 95 rupees last quarter, and against that we have an average rate of about 87 right now. So almost the entire impact is coming through on the GBP depreciation. The others have been few percentage points here or there, but mostly I think. So the cross currency impact of GBP will continue given where the currency currently is. We can't predict where it will end up with, but if you consider where it is today, another 7-8% depreciation of the GBP is currently on the cards, and we'll need to wait and see how it plays out in the rest of the quarter. So extreme volatility, and which will flow through on the operating profit line, and you will see some amount of recouping of it on the net profit through our hedging strategies.
So also rupee movement, where do you see rupee going ahead from here? You can.
I knew we would set up another business also, so no idea.
Nivrita, BTVI.
Good evening. Just wanted a slight follow-up on the Brexit question. Like you mentioned, the UK Prime Minister has said that they'll now kick off their hard Brexit by March. So does that change your strategy in the UK in any way? What do you see the medium-term impact being?
So not really. If you really look at from our vantage point, we work for a lot of national brands in the UK, whether it's banking, whether it's insurance, whether it is retail, whether it is manufacturing, every sector, utilities. These are big, large UK companies. And they serve UK UK customers, UK businesses. We do have some of the global financial services firms. We also serve them in UK, but predominantly most of the business is with UK firms. I think that their requirements are real, and they are continuing to do what they have to do in terms of whether it is on transformation programs, digital programs. Our conversations with them indicate that they will continue. So there is no, I don't see a particular headwind that I can link from our vantage point. So Brexit, what it does from a macro point of view is, I don't know. Because it also, there's a lot of fine footprint, no? So there are statements made about, immigration and so many other things. So we don't know. So at this point in time, we are not anticipating a negative. Once the things become clear, I think there will be a positive uptake because there will be more systems that will be needed. But during this uncertain period, better to stay close to the ground and watch.
All right, I also want to get your outlook on how you see your digital business and IoT performing going into the second half of this year.
As I said, we continue to enjoy momentum in digital. It includes IoT, it includes cloud, it includes all the other related technologies, analytics and so on and so forth. So I believe that those engagements are intact, and those engagements, as I said, you can take a look at the press release. Many engagements across sectors. It is happening across the board.
Okay, also, could you just give us a sense of how these operational efficiencies, which you spoke about earlier, how they helped offset many of these things that did weigh on your margins this quarter?
Meaning how many?
Like how much, or and what we can expect going into the third and fourth quarters?
See, okay.
If you look at it, as Petra also mentioned, what is most heartening about the margin performance this quarter is we have been able to get it at the gross margin level. And it's been a fairly across-the-board effort by most of our units. As you know, we are structured into independent operating units, and each of them, as they saw the demand softness coming in, reacted in their own way in their cost management side, and successfully managed to deliver the operating margin targets that they had. So fairly robust performance. And our target and our target operating band continues to remain at 26 to 28, and we stay focused on trying to achieve that.
Varun, Mint.
Good evening, Chandra. One clarification and three quick questions, sir. So when you said Q3 and Q4 will be better this year than last year when you had mentioned, were you saying this in reference to margins or in revenues with reference to revenues, sir?
You want to ask your other three questions?
Right. Firstly, the first question is, sir, what explains these project deferrals or the slowdown in BFSI? Is it something structural, like the way technology is changing? So, say the traditional way what IT vendors used to work, they're not really seeing that kind of work. More clients are looking at digital, so on and so forth. Or is it just a cyclical thing? If you can give some color that what is really behind this softness, that's the first question. Second, is digital discretionary? For the simple reason, like you all say that discretionary spending is being put on hold. So is digital now become so pervasive that it is no longer discretionary? If you can help me answer that. And finally, sir, Q3 and Q4 again, you've said US elections doesn't really, you don't see any impact from US elections, no impact from Brexit. Can we expect Q3 and Q4 from your client conversations, from your perch, will be any better than Q3, Q4 last year? Thank you.
Yeah, I think I did not say that we don't expect any impact of US elections in our Q3 and Q4. All I said is that US election is happening in Q3, so I cannot make any definitive statements on Q3 and Q4. So any statement I make should exclude any possible macro impact that can come on Q3 and Brexit. The limited point I'm making is that I don't have, from my vantage point, make a definitive judgment about impact of macro. I cannot make any definitive judgment. At this point in time, we are not seeing any direct impact, but what direct impact can come due to these kind of macro factors, as and when come, we have got to factor it. Today, I cannot factor that because I cannot say this is going to cost me 2% momentum loss, or this is going to cost me another $100 million in cost. None of those projections I can make. So I am just excluding any possible impact of macro, but I can't see it today. That's also I'm making. These are the two statements I'm making with respect to the macro. Having said that, I feel that the reason I say Q3, I was not talking about margins, I'm more talking about the revenue growth. The reason I said Q3 this year is likely to be better than the usual years is because even this India postponement that happened in this quarter, we think it will come in Q3. Okay, and that's a tailwind from a Q3 perspective. But I also think that some of the other engagements that we lost momentum in will ramp up in Q3. So these are the two primary reasons for me to say that Q3 this year will be better than the usual Q3 and usual Q4. And BFSI, see, I think, it is not that digital is discretionary that they can cancel it, but these are large programs in which we are supposed to be assigned and we have got to ramp up at a particular pace. That ramp up is getting delayed. Engagement is not cancelled. So the program is getting elongated. Why is it getting elongated? Can't say. Can't say. That's the softness we are seeing, especially in global banks.
But it's nothing structural.
Nothing structural. See, there are two things that I can verify. See, what is it that I can do when I see this? What is it that I can do as a person running the business? First is, I need to check whether I have a problem in that particular account. Is there anything wrong in that particular account with in their programs that they are doing? Second one is that engagement not getting funded? So these are the two realistic things I can do. And we do that. And anything more than that, I will be guessing, a lot of guessing here. See, the reason I say it is discretionary, they are not OPEX programs. Okay, so which means that they will get funded, even if the whole program is so much, they may not get funded in one shot. They will get funded by phases. So there are two reasons. One is their CAPEX programs and their change budgets. They are not run budgets. That is the point I am making. So when the clients No, the point I'm saying is that most of these things are delay in the change, not the delay in spending in the change.
Sir, just a last clarification. Any new additions in clients more than 100 million this quarter?
No, there is one client drop in 100 million this quarter, from last quarter to this quarter. That is primarily because that client has divested a part of that business, and that has become a new client for us. But otherwise there is no change.
So 2 consecutive quarters where a company like TCS hasn't added any 100 million plus clients. Is it a fair metric to even evaluate? Because you are a large company. Every quarter you need this helps us show about your client mining. Is it a worrying sign?
It is not. If you really go back and look at last 6 years, how we migrated the 100 million clients, there will be quarters where there may not be growth, there will be quarters there will be jump. So it is not that you kind of add one per quarter and so on and so forth. I think I'm pretty happy with our client mining. Metrics look good.
PR Sanjay, Bloomberg.
That's an important metric. We also track, like you track.
Sanjay here. Just to clarify, you said in both US elections and Brexit, at micro level, at this point of time, you are not seeing any specific negative impact, but macro level, there could be, right? Am I right?
There could be.
Okay. So at the later, it can affect your,
of course.
company. Have you thought through it, like what could be that and what could be the impact on the...
If I know that, I'll tell you. I am clearly declaring that I can't make that out.
So
because anything you can read about the macro outcome of these two kind of incidents, if you look at it, how many views you want? It's there. You go online. You have as many views as you want. So those are not views on which you can make decisions.
So what is worrying you?
But for me, I would say that fundamentally I believe that tech spending is real. Tech spending is real, digital transformation is real. Every industry is going through this transformation. The pace at which people will do vary from quarter to quarter. And we are seeing that softness. And in the absence of any cancellations, I can only relate it to the general concern on the macro. So people are waiting and watching and okay, let me do this, let me prioritize. This is absolutely needed, so I have to get it done. This is needed, but maybe I can wait and I can put it in the next cycle. So those kind of decisions people are making, which we all make, in our own company we'll make that.
So what is the other worrying factors apart from these two big events that may or may not affect you?
I mean, when you say worrying factor, what can I say? There's nothing specific I can talk about. I think, we are feeling that the environment is soft in some of the sectors. So we just have to be prepared. So we are prepared in the sense that we are focused on execution, things which we have complete control over. We focus on our win rate, on the deals that we have to win. We focus on we are focused on growth. Always I am known for pushing growth. But at the same time, I am also focused on disciplined growth. So we focus on margin. We are keeping an eye on the opportunities and also execution. That's all we can do.
Thank you.
Maulish, Business Standard.
Hi, I just wanted to understand the breakup of the EBIT margin movement, if you can share that, and also the volume growth. The third thing is again on the pound devaluation. I wanted to clarify about the impact of the pound devaluation for this quarter for the company, and how are you going to what is the way forward for the company? Like what are the key things that you will focus on going forward?
What is the second question?
Margin, volume, and then pound. So on the impact of pound comes both on the revenue line and as well as on the EBIT line. The total impact of currency movements is about 110 basis points, and primarily it is coming from pound. The impact of it at the EBIT level is about 40 basis points. So while we have improved by 90 basis points, there's another 40 basis point negative impact that has come through on the currency due to the currency. So net improvement on the operating side was 130 basis points, 40 taken away by the by currency, and 90 is what we currently have. Most of the impact is coming from the pound. 90% of the impact is coming from the pound movement. In terms of volume breakup, the volume is approximately in the range of about 1.3% against a growth of 1%. And in terms of options going forward, we need to look at it as to where it stabilizes and what the impact of it will be. In a sheer number terms, we are looking at another, currently where we stand, about a 7% or so depreciation. But is it oversold? Will it settle down? These are things that will be known only over the next course of the next few quarters. And once it settles down, we will relook at it and recalibrate our operating model to take into cognizance the currency rates. And in some form, it will also filter through into pricing discussions, into overall positioning in the local market. But I think that's further down the line. We'll have to wait and see where it settles down first before we make any major changes.
Yeah.
Impact of the currency, you said that there was an improvement of 130 basis points in your margins. Right. Can you talk us through how you arrived at that? Have you been doing anything exceptional in terms of cost cutting, deferring investment plans or anything like that?
So the one thing that we can affirm is that we haven't deferred any investment plans. Our investments continue apace. Most of them we have already spoken about in the past. The good news is that most of the improvement came at the gross margin level itself. So it's essentially operational efficiencies across the board, both at the employee cost level. It's not.
I know Chandra said it's been a tough quarter from a volume pricing point of view, but it's definitely not pricing, not a one-off deal, only operational efficiency.
In a business which is half T&M, half fixed price, pricing is a variable. So realizations have improved. Partially internal, partially external focused. Business mix has improved. You will find that service lines like enterprise solutions, consulting and all have grown higher than the company average. So you see that mix change also flowing through. So multiple small things, various levers of operational efficiency all have contributed to the 90 basis point improvement at the gross margin level. Now you're asking me to comment not just on the margin but the rate of improvement. We have a target band and we stay focused on trying to get.
Can you maintain these improvements? Will you continue to bring in more operational efficiencies? Do you expect that the mix that has turned in favor of higher margin businesses like consulting will continue? Is it a one quarter improvement of up to 130 basis points? Or can we see this kind of rate and improvement in the subsequent quarters as well?
So operationally, we are focused on trying to operate within the margin band that we have spoken about. We are now at the lower end of it and we'll stay focused on trying to improve it.
The key message there, Menaka, is to stay within 26 to 28. Where we will end up in a quarter, I think it's a function of but our discipline will continue.
Okay, what I'm trying to understand is that you missed that band in the last quarter. And is this an exceptional effort to come back into the band? And therefore, is it just an improvement that we will see this quarter? Or has something changed in the way you operate that we might continue to see margin improvements in the quarters to come? Because I think you got a lot of flack last time for missing the band.
We have already given you enough to say that we'll stay within the band. Everybody's
so this is a one-time effort to come back into the band because last time we got a lot of flack for missing the band.
It's not a one-off. Also we have said it is not a one-off. It is structural. So leave it at that. Where we will end up, we'll leave it at that.
Thank you very much.
I think we don't give guidance, but we have given a band for margin. So you stay with the band.
Thank you very much, ladies and gentlemen. Please join us for a cup of tea outside. TV guys, please come up with your booms.